Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we deliver deep dive analyses, hot news, reliable projections about the blockchain universe, Web3, and digital money trends. Today we're diving into one of the worst days for the memecoin sector, which is enduring a brutal sell-off over the past 24 hours. Assets like PEPE, SPX 6900, and Fartcoin have collapsed, while Bitcoin's dominance surged to 63.83%, signaling a flight from riskier altcoins. The panic is fueled by geopolitical tensions, such as Israel's strike on Iran, broader market declines. But is this correction a buying opportunity, or a warning to exit before it worsens? Let's dissect the technical fundamentals, regulatory risks, and how projects like BTC Bull Token and Virtual Protocol could thrive amid the chaos. Memecoin market faces massacre, scale causes, and ecosystem impact. The memecoin sector is undergoing one of its worst corrections in months. Tokens like PEPE SPX 6900 and Fartcoin are leading losses. This isn't an isolated drop. Over $10 billion vanished from the sector in 48 hours, according to CoinMarketCap. The crash stems from a mix of whale selling, liquidity drains on DEXs like Jupiter Exchange, and geopolitical stress, which pushed oil prices up 7% and global equities down to 24%. The massacre also highlights the speculative nature of these assets. Projects like Fartcoin, which went viral after an AI bot generated goats memes in October 2024, are the hardest hit. Despite peaking at a $1.5 billion market cap in December 2024, Fartcoin now struggles to hold $0.0008, with daily volume down 60%. The lack of utility beyond meme culture and hype-driven narratives explains the volatility. Meanwhile, PEPE, which surged 1,000% in May 2023, faces a resilience test. Its 12% drop coincides with India's Reserve Bank proposing taxes on tokens with over 30% gains in 24 hours. And the SEC investigating projects like Snorterbot for enabling rug pulls. For traders, the message is clear. Memecoins are ultra-sensitive to FUD, and sharp corrections demand strict risk management. Israel's attack on Iran and the FOMO-FUD cycle in crypto. Israel's June 12, 2025. Strike on Iran not only spiked oil prices 7%, but also reignited the classic FOMO-FUD cycle in crypto. When conflict news breaks, investors flock to safe haven assets like BTC and gold, while fleeing riskier altcoins. Historically, geopolitical crises boost Bitcoin. In February 2022, Russia's invasion of Ukraine sent BTC from $36,000 to $47,000 in a month, only to fall again with the Fed's March 2022 rate hikes. Today's scenario repeats this pattern, but with a key difference. Spot BTC ETFs now hold $60 billion in AUM, making it easier to rotate out of memecoins into digital gold. The Fed's 5.25 to 5.5% interest rates also pressure risk assets. Dollar volatility and Bitcoin's negative correlation with the Japanese yen are affecting projects like World Liberty Financial, a token tied to ex-President Donald Trump, which lost 9% post-strike. The lack of utility beyond governance and reliance on favorable policy shifts creates fragility. Bitcoin dominance hits 63.83%. Risk, flight, or trend consolidation. Bitcoin's dominance hit 63.83%. It's the highest since the $108,000 rally in April 2024. This signals a shift from altcoins to BTC, now driven by institutional inflows of $1.1 billion into BlackRock and Fidelity ETFs last week, while tokens like Fartcoin and Pepe saw $1.2 billion withdrawn from DEXs. This isn't new. In 2023, during the Silicon Valley Bank crisis, BTC dominance rose 12%, while memecoins like Shiba, Inu, and Dogecoin lost 20 to 25%. Today, spot BTC ETFs are the catalyst. However, the scale differs. In 2023, BTC held 40% of market cap, but now it's 63.83%, reflecting stronger trust in its role as a reserve asset. For projects like BTC Bull Token, which rewards hodlers with BTC at price milestones. BTC's dominant surge is a chance to shine. If BTC tests $120,000 by 2026, BTC BULL's BTC rewards could skyrocket, attracting leveraged traders. Meanwhile, tokens like WLFI and Snort face regulatory scrutiny. As the SEC ramps up oversight of governance tokens lacking clear utility, technical analysis of PEPI, SPX 6900, and Fartcoin, critical supports and recovery scenarios. From a technical perspective, top memecoins are testing supports that, if broken, could accelerate losses. PEPE. After a 12% drop, the token trades at $0.000013, near the psychological support of $0.000012. Its RSI at 32 signals oversold conditions. But a breakdown below $0.0001 could send it to $0.0008, a new low. It's PX 6900. The 15% plunge reveals a death cross on the 4-hour chart, with the 9-period MA crossing below the 21-period MA. This suggests selling pressure will persist until the next BTC halving in 2028. Fartcoin. After hitting $1.5 billion in December 2024, Fartcoin now trades at $0.0008. With daily volume collapsing 60%, its Chaikin money flow at -0.3 confirms capital outflows. Yet opportunities arise from the chaos. BTC BULL, for instance, still offers 56% APY via staking, even after a 9% weekly drop. Investors buying below $0.00257 could profit from BTC's next bull run, thanks to milestone-linked airdrops. Meanwhile, Virtual Protocol, a rebranded Path DAO, faces resistance at $0.003. But its decentralized AI integration and Solana DEX partnerships may support recovery. Investor strategies. Buy the dip or flee the FUD. Two strategies emerge amid the carnage. 1. Buy the oversold BIP. Buying at $0.000013 with a stop loss at $0.0011 targets, $0.0018, BTC BULL above $0.00257, with take profit at $0.004 and stop loss at $0.002. It offers leveraged exposure to BTC's rally. 2. Sell risky positions. Fartcoin. With support at $0.0008 and a negative CMF could test $0.0005 if FUD persists. WLFI. Trump-linked governance tokens face regulatory risks. If the Genius Act stalls in the US, WLFI could lose 20%. Stablecoin-based RWA projects like Frax Finance and Centrifuge offer safer havens. Migrating to RWA tokens can protect portfolios from volatile memecoins. The key is balancing exposure across reserve assets, infrastructure, leveraged plays, adjusting allocation as fear and risk aversion evolve. Conclusion. Memecoins in recession. End of the narrative or a unique opportunity. The memecoin crash follows a cyclical pattern. During FUD, assets with clear utility and institutional liquidity strengthen, while speculative projects suffer. Yet stories like BTC BULL and Virtual show opportunities endure, even in bear markets. The decision to buy the dip or flee risk hinges on two factors: risk management. Stop losses and weighted allocation are critical to avoid mass dumps. Regulatory trends. Passage of the Genius Act in the US and spot BTC ETF expansion in Europe could reverse the narrative. For our channel's audience, the takeaway is clear. Memecoins are short-term plays, but demand discipline. If you believe in BTBL or Virtual's potential, share your views in the comments. Don't forget to subscribe for real-time updates and join our live streams where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. Bitcoin might be a stellar bet, but always assess your risk profile. Till next time, may the market treat your trades kindly.